Mortgage rates continued to fall last week, but after several weeks of big gains, mortgage demand dropped off really pretty sharply. So the average rate on the 30-year fixed, according to Mortgage Bankers Association, dropped to 6.19%, just a little bit from 6.20. Now, it started this year, though, at 6.58%. About a year ago, it was half that. Even with rates well off their recent highs, applications to refinance a home loan fell 7% for the week and were 80% lower than the same week a year ago. Mortgage applications to buy a home fell a wider 10% for the week and were down 41% year over year. While both home prices and mortgage rates are coming down steadily, housing is still historically pricey, and the supply of homes for sale is still quite low, and that may also be keeping mortgage demand under pressure. Now, the MBA noted they were surprised by the drop as much as I was, citing volatility in the market right now, as well as strong demand coming off the holidays. They said this drop this week could just be, quote, a blip.
We'll see. Diana, stay right there. Let's also bring in Andy Walden of Black Knight to discuss the potential impact of today's Fed decision on the housing market. Andy, welcome to you. It's ironic, if they keep hiking and the market thinks that's going to send us into a slowdown, the 10-year will keep dropping, which could stimulate the home buying portion of the market. Maybe. I don't know. What do you think?
Yeah, and I mean, that's typically what you've seen in past cycles, right? The 10-year, 30-year fixed rate try to get out in front of Fed movements, and we've seen that happen throughout 2022. Same way on the rate down, right? You'd expect that with the Fed expected to plateau rates this year, that 30-year rates would remain relatively high. Not necessarily what we've seen over the last 4 Fed tightening cycles. And so there is some expectation that rates could ease here despite the Fed expecting to hold rates higher throughout 2023.
And how much is that, Diana, so far contributing towards any increase in buying demand? I mean, are people that rate sensitive, or is affordability so stretched that this doesn't yet make a dent?
Well, I think it is helping a little bit. Look, we saw pending home sales last week, which was for the December report, that signed contracts. They went up unexpectedly. And also the last 2 builder reports that we got this week from Pulte and last week from D.R. Horton also showed unexpected new demand coming in December. And that's when rates fell back the most from their highs in October. So I do think that there are some people who were on the fence, saw rates come down a bit and said, OK, let me get in when the market's not that competitive. And again, we're seeing prices come down really sharply. And I'm wondering from Andy if he expects to see prices fall much further. We're already down 6% from June, according to Case-Shiller, and they're falling much more sharply than they did during the Great Recession.
Andy?
Yeah, and I think you will, right? If you look at, we just released our latest Black Knight home price index last week. It showed the 6th consecutive month-over-month decline in home prices. If you look at home affordability, it's absolutely improved from where it was in October or November. You're still looking at home affordability that's worse than it was at the peak of the market in 2006, and that's going to continue to put downward pressure on prices. If you look at that annual home price growth rate, it's down to 5% as of December. But if you look at the trajectory, it's set to cross over that 0% threshold by March and April of this year.
Wow.
Right now, those monthly numbers are telling us negative 5%-ish is kind of where that annual rate would move if we continue to see the behavior that we have been. So I would expect the market to continue to correct. I think we're, from a transactional perspective, we are seeing buyers start to come out from their winter hibernation. It is a stronger January so far, all in, despite the jumps and drops on a weekly basis. So transactions reaching their floor, the price is still softening as we move into 2023.
Andy, maybe then you can riddle me why we're seeing the home building stocks at multi-year highs at a time when you're talking about prices going through, back to zero in terms of increases. It's bizarre.
Yeah, it almost feels like you're seeing the upslope, right? So if you look at demand or purchase locks or sale volumes, according to our data in December, they were roughly 30% below pre-pandemic levels. They are starting to swing a little bit as we get into early January. So maybe trying to call the dip on some of those stocks out there in the market, call the floor on some of that transactional volume activity. And when you look at the purchase market, it is expected to gradually rise as we move throughout 2023, despite the really challenging Q1 that we're looking at here.
Real quickly, Diana, none of these, look, more people are taking out arms than usual because of high rates, ironically, but these are usually, 7-year resets? It wouldn't affect that many people right now.
Yeah, we're still a very low volume of arms, below 10%, which is nothing compared to what we saw during the last housing boom. People are still being very conservative and mostly going for the 30-year fix. They are, however, taking out more home equity lines, which could mean that that's a sign that the economy is pushing them to get money where they can, and that's in their house.
Right, and that would reset higher with this move potentially. All right, we'll leave it there. Thank you both, Diana Olick and Andy Walden.